Silver has crashed, gold has fallen, and Bitcoin is now flashing extreme fear. That combination matters, because when silver, gold, and crypto all come under pressure at the same time, this is no longer just a precious metal story. It starts to look like a wider warning about liquidity, confidence, interest rates, and risk appetite. Welcome to the 2% Brief. In this video, I want to look at what changed, why silver was hit harder than gold, and why Bitcoin's latest weakness may be confirming the same message rather than contradicting it. But first, if you like this subject, please give this video a thumbs up and subscribe to the channel. Not forgetting to pop on over to Substack, where I provide more detail and more data. Now let's start with the obvious. Silver has been hit very hard. Gold has also fallen, but silver has taken the bigger blow. That is important because silver is not just a monetary metal. It's also an industrial metal, a liquidity-sensitive asset, and a more volatile expression of investor confidence. When investors are confident, silver can outperform gold. But when markets begin to worry about liquidity, rates growth, or forced selling, silver can fall much faster. That is what we're seeing now. Gold has fallen because the market is reassessing interest rates. A stronger US jobs report has made it harder for investors to assume that rate cuts are just around the corner. The US economy added far more jobs than expected, and that has pushed the market back toward the idea that rates may have to stay higher for longer. And that is not good for gold in the short term, because gold does not pay income. So when bond yields rise, or when investors start pricing in fewer rate cuts, some money moves away from gold and back towards assets that offer yield. But silver has another problem. Silver is also tied to industrial demand, manufacturing expectations, and global growth sentiment. So when the market starts worrying that higher rates may squeeze economic activity, silver can get hit from both sides. It loses some of the monetary support that helps gold, and it also gets punished as a growth-sensitive asset. And that is why silver falling harder than gold is not just a price move, it's a signal. And this is where Bitcoin comes in. Bitcoin is also under pressure, and crypto sentiment has moved into extreme fear. The Crypto Fear and Greed Index is showing a reading of 13, which is firmly in extreme fear territory. That does not mean Bitcoin must fall further, and it does not mean the bottom is in either, but it does tell us that speculative confidence has been damaged. Because that matters for gold and silver investors, because Bitcoin often behaves like a liquidity barometer. When liquidity is easy, speculative assets tend to perform well. Bitcoin rises, smaller coin or alts rise. Silver often performs better, risk appetite expands. But when liquidity tightens or when investors start fearing higher rates, those same assets can come under pressure together. So the important question is not simply, why did silver crash? The better question is, why are silver and Bitcoin both struggling while gold is also weakening? That points to a wider repricing. The market may be saying that the easy rate cut story has been pushed back. It may be saying that investors are less willing to chase risk. It may also be saying that the inflation problem has not gone away cleanly enough for central banks to relax. And this is where the situation becomes uncomfortable. If inflation remains sticky, but growth starts to weaken, markets face a difficult environment. That's not the clean risk-on environment that helps crypto. It's not automatically good for silver either, and even gold can come under pressure in the first stage if yields and the dollar rise sharply. This is why I've said before that gold, silver, and Bitcoin do not always move together. They respond to different forces. Gold is the cleaner protection trade. Silver is part monetary metal, part industrial metal, and part liquidity trade. Bitcoin is a high sensitivity confidence and liquidity asset. But when all three are under pressure at the same time, you have to pay attention. It suggests the market is not simply rotating from one asset to another, it may be reducing exposure across several areas at once. That is the warning. Now, does this mean silver is finished? No, that would be far too simplistic. Silver can fall violently and then recover violently. It's one of the most emotional and volatile major markets. A sharp silver sell-off does not automatically invalidate the longer-term argument for precious metals. But it does mean the short-term market has changed. The previous story was that inflation pressure, debt concerns, and central bank credibility issues were supporting metals. That story may still be true over the longer term. But the short-term story is now different. Markets are asking whether rates will stay higher for longer. They're asking whether liquidity is tightening again. They're asking whether risk assets have gone too far, too fast. And when those questions return, silver is usually one of the first places where stress appears. So what should investors watch next? Well, first watch whether silver stabilizes relative to gold. If silver continues to fall much harder than gold, that suggests the market is still reducing risk and questioning growth expectations. Second, watch Bitcoin. Not because Bitcoin tells us everything, but because it gives us a useful read on speculative appetite. If Bitcoin continues weakening while crypto sentiment remains in extreme fear, that would support the idea that liquidity pressure is spreading. And third, watch the US dollar and bond yields. If yields keep rising and the dollar strengthens, gold and silver may remain under pressure in the short term. But if yields start to soften again and the dollar loses momentum, gold may stabilize first. Silver may then follow, but usually with more volatility. And fourth, watch whether the market begins to separate gold from silver again. If investors become genuinely worried about financial stress, gold can recover even while silver remains weak. That would be a very different signal from both metals falling together. And finally, watch the narrative. Markets often turn before the headlines do. At first, the story is just gold fell or silver crashed. Then the story becomes rate cuts are being repriced. Then it becomes risk appetite is deteriorating. And only later do people begin asking whether something bigger has changed beneath the surface. And that is why today, yesterday, and last week's move matters. Silver crashing is not just about silver. Gold falling is not just about gold. Bitcoin flashing extreme fear is not just about crypto. Taken together, they're telling us that the market is becoming more cautious, more sensitive to interest rates, and less willing to assume that liquidity will rescue every asset class. That does not mean panic, but it does mean discipline. This is the moment to watch confirmation, not just read the headlines. If silver stabilizes, gold holds its ground, and Bitcoin recovers from extreme fear, then this may prove to be a sharp but temporary shakeout. But if silver keeps falling, gold remains under pressure, and Bitcoin continues flashing that fear, then the warning becomes harder to ignore. Because the real issue may not be precious metals. The real issue may be that markets are starting to reprice liquidity again. And when liquidity gets repriced, silver usually notices early, gold usually confirms later, and Bitcoin often shows where the speculative confidence has really broken. That is the signal I'm watching now. If you found this useful, please like the video, subscribe to the channel, and turn on notifications. It helps YouTube understand that calm, serious financial analysis still has an audience. And let me know in the comments, do you see this as a temporary shakeout or the start of a wider market warning? Thank you for watching. On screen now are my latest videos. Please take a look and also subscribe to our Substack. Link in the comments and description box below.